be available to other folks that were not able to participate. So, all right, well, let's jump in. Today we're going to be covering everything from a high level, as you might expect from any 101 training that's only an hour and a half long. We're not going to be able to dive deeply into any particular topic. However, I do want to unpack some of these high-level concepts in a way that sets a really solid foundation of understanding, from which you can either dive deeper as an individual or engage with your boards in discussion. We're also hoping to kind of develop this into a 201, 301 series of trainings. So we'll be working on developing that and rolling that out later on throughout the year. In addition, you might have seen on our website, but this exact training is going to be offered 5 more times in 2021 from the standpoint that the more of us who are discussing board leadership, board membership, and board responsibilities, the better for our community. So feel free to invite those from your own boards or from folks that you know that are interested in serving on boards to attend future trainings. So we're going to start with a high level of thinking about why a board exists, getting a little bit deeper into the responsibilities both that you all have as individuals coming to a board and what you as a board as a whole have as a responsibility, not only to the individual members, but to yourself as a group. We're going to sort of couch some of these discussions and create some common terminology around growth cycles of nonprofits and how that informs how a board can function and what role it serves. We're going to talk about key ingredients for you as an individual and for you as a group in a board. And then we're going to end on everyone's favorite subject, which is financials. And the reason I kind of call this out is that financial acumen and understanding of an organization helps give you a lens into or a glimpse into other aspects of the organization that you as a board member are responsible for. So we're going to end there and talk a little bit about financial statements and nonprofit accounting and budgets. I promise to keep that also at a high level and not dive too deeply for now. So if you have a question, Jane, to your comment in the chat, feel free to either use the chat or just to jump in. If it's sort of a general question, feel free to put it in the chat and I can get to it when I can. If it's something that's on the slide we're talking about, please feel free to just jump in. All right, so forgive my lame graphics here, but I want to talk a little bit about what is a board. I think many times we kind of just take for granted the systems that we walk into, the systems that are already established. And in this context, we find ourselves in a system in which we generally start our hierarchical board or organizational chart with the board of directors at the top, right? And then it kind of comes down to the executive director and then out to staff or volunteers. That's a very kind of traditional, conventional, well-established hierarchical way to think about the system that we're in, this nonprofit system. And I want to try to rethink that structure a little bit as we start out here and center ourselves around our community. And I'm going to use the term community in a sort of singular sense, but it means something different to each organization. A community is generally the folks that you seek to serve with your organization, those for whom you exist. So you think about whether it's Madres e Hijos or KHEN or any of the other organizations, Colorado Central Colorado Humanists, who do you exist to serve? That's your community. And they should be at the center of your organizational model. And that's one thing to say, but one way to actionalize or to bring that into practice is in kind of 2 main ideas. One is your community represented on your board of directors? Are the folks that you seek to serve actually a part of the decision-making fabric of your organization? Many times this is really, really difficult to achieve for many reasons, but the primary one is that it's not the norm in our system. The norm in our system is that those that are passionate, are the ones working on an issue, and then they design services and programs to serve those that need those services or programs. And what I want to challenge us on to right out of the gate is to think about how are you engaging with your community, not only to hear from them, but to give them participation in how you make decisions. The easiest way to draw a direct line between your community and decision making is to have community members on your board, right? That ensures that folks are at the table for decision-making processes. However, there are many other ways to achieve this as well. But what I want to say is that our board should exist around and for our community and not above our community. So just a conceptual shift that I want to start out with, a way to frame the conversation. And then we'll talk about this a little bit more, but the staff or volunteers of an organization, again, we're all accountable, not only to the board, but to that community. So that's kind of why I chose this diagram, is to try to make sure that everything we do is centered around those whom we seek to serve, and that we're not excluding them from the decision-making of the organization. We can think about board responsibilities in a variety of different ways. And I just touched upon what to me is the most fundamental moral responsibility of a board. It is to represent and to hold at the highest of interests the community that you serve. Then there's sort of the more day-to-day or legal responsibilities of board members and of boards of directors. And we can kind of classify these into three primary legal responsibilities that all kind of fall under this title of fiduciary roles or fiduciary responsibilities. You as board members are fiduciaries for your organization. That means three primary things in sort of legalese. The first one we'll talk about is a duty of care. This speaks to thinking through what are the resources that your organization needs to achieve its mission. Your job as a board member under your duty of care is to ensure your organization has the resources that it needs to carry out its mission. Many times we think about resources in financial terms, but we also, obviously with all of you here, need to recognize human capital, expertise, volunteer time, in-kind contributions from supporters, physical property, any number of things could be counted as resources. So does the organization have adequate resources to achieve its mission? That's one of your primary duties. The second piece of duty of care is to really ask the question, are we using the resources we do have prudently and effectively? And we'll talk much more about this. But you as a board member are legally, personally liable and responsible for how your organization uses its resources. And that can sound scary, but it can also sound like a really exciting opportunity to take charge of those resources. Duty of loyalty. This really is one in which we'll talk more about the mission statement and vision and values, but are you being true to your stated mission statement? Many times you all probably are familiar with the term mission creep in the nonprofit space. The opportunity arises to pursue XYZ resource or opportunity, and it might be stretching the bounds or be fully outside of why you exist, right? How are you as a board member helping to steer your organization always back to the mission? And if you really need to change the mission because your community needs something different, you can do that as a board. You can change your mission, but always you should be working to be truthful to what that mission states. Part of this duty of loyalty is thinking about, are there ways in which you individually or any board member is gaining personally from your service? Obviously, we all gain in sort of a heart sense from our service, but we should be avoiding conflicts of interest and personal gain. A note on this is that in small communities, we almost always have conflicts of interest. We almost always maybe provide a service to the community that then the nonprofit needs to pay for, right? So maybe the Asian Palette is going to cater an event for Madres e Hijos, and Madres e Hijos is going to pay Asian palette, right? It's a conflict of interest. It's not a big one. It can be disclosed, talked about, addressed, and continue forward. But there are larger conflicts of interest that need to be discussed and addressed. And really the biggest issue there is disclosure, making sure that folks understand and know about these conflicts of interest and these relationships. Duty of obedience is sort of that last of the big three. This speaks again back to mission. Are we obeying our mission? Are we being truthful to our mission statement? But also in a more sort of mundane legal sense, are we obeying and operating legally within the confines of law and of regulation? And the final aspect of this is going back to your bylaws, right? All of you as nonprofit organizations have bylaws. And what do those bylaws say? This is a legal document that should govern the processes by which you operate. It doesn't define everything you do. It doesn't go into that much detail. It doesn't need to. But what it does say about how you're organized, how you make decisions, what kind of committees you have, what kind of officers you have, how often you meet, those types of pieces. If those bylaws don't reflect your current practices, you're opening yourselves up to not only legal liability, but also to straying from your duty of obedience. I'm going to pause right there. Are there questions on any of this or thoughts that you all have? I like to get some of these responsibilities out in the open right away. So the fourth bullet that I have here is one that applies to organizations that have staff. If you don't have staff, the fourth bullet does or does not apply to you. But really, at the end of the day, when it relates to staff, the board's primary responsibility is to hire, support, and evaluate the executive director, right? After that, the executive director is the one that hires, fires, evaluates all the other staff in the organization. And we'll talk in a moment about how the life cycle of an organization kind of impacts this. But at the broad level, all of these are your fiduciary responsibilities to your organization. And I think it's really important, and the reason I kind of start out the presentation with some of these is to remind ourselves that being a board member is not just a feel-good volunteer opportunity. It's also a legal responsibility to your organization, to your community that you serve. And the way in which board members can make sure they're protected is to ensure their organizations have directors and officers insurance. So that's a very practical, pragmatic thing that every organization should have. It literally just protects your personal assets from any sort of worst case scenario around liability for the organization. So we can follow up on what ifs or scenarios and that if you'd like to, but suffice to say that make sure you have directors and officers insurance. And if you don't, put it on your to-do list to secure. Any other final thoughts on kind of high level responsibilities of a board or board members?
Can you say a little bit more about the liability insurance?
Yeah. So the coverage is called directors and officers. And just like it sounds, it covers, it provides a shield for any director or officer's personal assets that in the worst case scenario in which your organization is sued for negligence or someone says you are not following your own bylaws and for some reason that's caused them harm and they're going to sue you over that, you would have a shield between that lawsuit and your personal assets. Without that shield, you are directly personally liable for what your organization does. So if your organization demonstrates willful negligence in any regard, then you could be held to account for that from your personal assets. So that's the purpose of directors and officers insurance. It's generally not that expensive and a very widely used product. So happy to answer more detailed questions if you have them. All right. So let's move on into some more of the fun, engaging pieces of this. This is one graphic, and there are many different ways to think about the life cycle of an organization. But it's really important as we think about boards and our responsibilities as board members to try to ask ourselves, where is our organization in its life cycle? And I should say that just like humans, every organization has a life cycle, right? We start up, we grow through what's called on this chart adolescence and maturity. And then many times, many times, whether you're a nonprofit or a for-profit, there's a time of stagnation, a time of leveling off of momentum, a time of maybe even decline of impact, where for whatever reason, your organization starts to become maybe less relevant. The needs that you have been addressing are less acute, and therefore you're feeling like you're having less of an impact. And then the board's job is not only to understand where are you, but identifying those key markers that might tell you if you're entering a time of stagnation, a time of decline, and give you the ability to say, how do we renew? Instead of continuing all the way down to defunct, how do we follow that dotted line and move back over to a place of growth, to relevancy, to impact? That's your job as a board, is to constantly be looking out for the symptoms and the markers in your organization of where you are in this life cycle. And those don't all have to be looking out for negative things. They can be looking out for the positive things as well. Many times where you are on this growth or life cycle will determine what kind of roles the board of directors plays. So oftentimes a startup organization, an organization in its infancy, the board of directors, oftentimes a founding board or maybe the first generation of next board members after the founding board, very much what we call a working board. The delineation and the distinction between board roles and day-to-day operations of the organization or staff roles are really not there because everything's just getting started. So a key marker of a startup organization is when board members are actively working on creating all the different pieces of the organization, from policies all the way into designing programs and evaluation, or doing fundraising, or doing the bookkeeping, all those different pieces, right? Startup boards are oftentimes working boards. As an organization begins to mature and grow, there starts to become a time in which you can delegate and divide responsibilities more and more, to where the day-to-day operations of the organization, the day-to-day management, start to become the responsibility more of staff and volunteers and less of the board. And the board is able to start focusing more on lifting your head up a little bit and saying, where are we going in 3 years? Where do we want to be in 5 years? What do we anticipate the needs of the community being? What has the community said to us lately about their needs? How do we ensure that we have an operating reserve? What key policies are we missing in our policy book that will help guide us in the right direction? All of these questions are generally more attributed to a sort of policy board or a governance board that can be a little bit more forward-thinking, strategic, not really worried about what money is coming in and out of the bank account today, or what program activities are going on today, but more worried about who are we as an organization and how are we staying true to our mission over the next 12 to 36 months, right? Those kinds of conversations. As the board starts to get more separated from the day-to-day, having quality and appropriate ways in which the board is reported to and kept up to date on the day-to-day becomes more and more crucial. And you all can imagine that as the board gets less integrated in the day-to-day operations, it's easier for the organization to start going astray. And so it's the board's job to say, we need to understand what's happening, therefore we want this kind of information. We'll talk a little bit more about board reporting at the end of this. Are there questions or thoughts on the life cycle? Again, this is one way to think about it, not the only way to think about the life cycle.
Well, I'm interested in any comment. I mean, it just, out of interest, it looks like a potential business model too. I mean, in the terms of, you know, starting a business, growing the business, sustaining it, and then what?
Yeah.
You know, you're either growing or you're declining. So it looks very familiar in that way.
And, you know, I would say, to be honest, the distinctions between nonprofit and for-profit are much less acute or distinct than we normally think. There are so many similarities, and nonprofits especially have so much to learn from how for-profits operate. Not everything, right? That goes the other way too. For-profits have a lot to learn from how nonprofits operate. But I would absolutely echo what you said, that this life cycle could apply to for-profit, nonprofit. The idea of a board of directors' responsibilities would look very similar in a public corporation to what I just outlined. So all those things, for sure.
Joseph?
Joseph, oh, go ahead.
Yeah, Steve, go ahead, and then Lori.
Thank you. It is very similar to a for-profit, and many times in a for-profit, as an executive director or board member, you're really, really tight with that organization because there are shareholders and stockholders, et cetera, that you're reporting to. And the nonprofits, there's a much wider space in there to where the reporting is, and it's much more. But where you have got this line for renew at that growth, asking your opinion about a sign or signs that a nonprofit needs to start looking at a renewal.
Yeah.
Renew their objectives, renew their program, where, in my opinion, it's very obvious on a for-profit. Nonprofits can be much more difficult. So your thoughts on that, please.
Yeah, I'll offer a couple here, and then I hope to address other aspects of this as we move forward in the presentation as well, Steve. But the first couple of thoughts are that I go back to the idea of being centered on community. What are the signs that you are having the impact you had 3 years ago, 10 years ago? Are those metrics of impact and outcomes from your programming, are those still really powerful, or are they starting to stagnate? To me, a secondary symptom might be funding. Is your fundraising becoming harder to raise? Is it costing you more to raise less dollars? Are you not bringing in kind of large programmatic grants like maybe you used to? I call those secondary markers because oftentimes that reflects more on the shift of priorities of funders than it does on your relevancy and the relevancy of your programs. But those are a couple of initial thoughts. And as I mentioned, we'll talk a little bit more about how we stay on course here in a moment. Lori?
So my question is more along the lines of the founding board, right? I mean, we're brand new, but is there like an estimated time frame of how long you have the founding board before you transition? And is that somewhere, does that metrics live somewhere on this chart?
Yeah, it's a great question. So the simple answer is no, there's not a standard time. But I would say that your bylaws should define board terms. If your bylaws do not define board terms, then you need to rewrite your bylaws. And I've seen this many times in which organizations all of a sudden realize they've had the same board members for 15, 20 years, and they wonder why they are stagnant as an organization. Or they wonder why they're not able to implement needed changes in their direction. So one of the most important things you can do in your bylaws is to implement, for our foundation, we have 3-year board terms. I think you can serve 2 consecutive terms and you have to come off for at least a term, right? And then you could go back on if you wanted to. It helps encourage this idea of growth and turnover. So that gets a little bit to your question, Lori. I think the bigger question is, what kind of programming are you looking to do, and how quickly are you able to add staff? Because I think that moment in which you start having paid staff is a very clear marker that you are entering adolescence as an organization. And you're able to then start saying, okay, well, you 2 board members that used to do all the bookkeeping for us, you don't have to do that anymore because now the staff is going to do that. you're going to start reviewing the high level financials and make sure that we're staying on track from a financial perspective, right? So it's one of the key markers, by no means the only marker though.
Perfect. Thank you.
Yeah. All right, we'll keep going, and please keep peppering in with questions here. I want to run through a couple of slides that are relatively straightforward, and many times we feel they're common sense, but often I feel like they're overlooked from a practical day-to-day standpoint. The first is, how are we bringing ourselves to our organizations? So try to separate yourself for a moment from your board seat and ask yourself, what am I bringing to this seat? There are some key ingredients in what you're bringing if you want to be an effective board member for your organization. And I always go back to the why. Many of you have probably seen, I'm going to space out the guy's name, but the Starting with the Why YouTube TED Talk, I believe it was. This idea that the why, the mission behind what you're doing, answering that question is going to keep you far more motivated and engaged than any of the what or the how questions. So asking yourself and being clear with yourself on why are you a board member of this organization? That answer is going to help make sure that you are bringing yourself and you're going to be effective for the organization. Obviously, your why is going to be and should be connected to the why of the organization, to the mission of the organization. If there's not a strong connection there, then it's going to be tough to be motivated to be an effective board member. Another thing I really counsel board members on is bringing all of their life experience with them. Sometimes I think as board members, we are reluctant to speak up or to have an opinion for lack of nonprofit experience. And yet, as we were just talking about, the skill sets, the important decisions, the key work of nonprofits oftentimes is guided by decision-making or decisions that are similar to any other context in life. So you need to bring all of who you are, your life experience, your expertise, your professional career, your networks, all of who you are to your board position. And that's going to help you be the most effective board member you can be. We already talked a little bit about the legal sense of ownership. You are legally an owner of the organization, or the closest thing there is to an owner of the entity. But there's also this sort of moral or inner sense of ownership. As a board member, you should feel pride and ownership in your organization, and that should help drive how you approach your board experience. Preparedness speaks a lot to this idea that board commitments take time, which is the second main bullet down there. Being prepared is one of those simple steps that we often, and I include myself in this all the time, we often don't do, right? We know we should be prepared. We know we should read all the materials before a board meeting. We know we should do the research or pick up the phone and call that donor or whatever it is. And we just don't seem to find the time. That's one of the most important things we can do, is be prepared and devote the time needed to the organization. We'll talk a little bit more about this last one as well as we continue forward, but a personal financial contribution. This is one of the most important objective metrics of nonprofit boards. And I say this both having been on staff and board and now on the funding side of nonprofits. Every single board member needs to contribute personally to the organization. We don't need to define how much that has to be. It's not like everybody has to write a $10,000 check, but everybody needs to be giving. And if we flip this concept on its head, the question from my perspective at a community foundation, if an organization is coming to me for funding and I ask, are all your board members financially supporting your organization? And you say no, what impression does that give me of the level of commitment that your board members have to your organization? So I want to just challenge everyone to say, usually, if you're serving on a board, that organization should be the recipient or one of the top 3 recipients of your giving every year. So again, I'm not trying to place on dollar amounts here. It does not matter. You could write a $20 check, but are you contributing financially? That's an important metric, especially as you start pursuing grants that folks are going to want to know. Steve, did you want to jump in?
Now, just to follow up on what you were saying about starting with the why, and I'm very involved with Rotary, and Rotary has been around for 115 years. It has 32,000 clubs around the world, and they have taken this book, What's Your Why, and made it the foundation of all they focus on. So reading this book is a great way to start to be the best board member you possibly can. So I just heard you mention that, and it struck a bell, and I just wanted to support you on that thought.
Thank you, Steve. And that author's Simon Sinek. He's the gentleman I was referring to. So I appreciate you doing that. So flipping around a little bit, thinking about as a group, what are key ingredients of a group, of a board member or of a board? Again, we start with the why. Every single board member should be able to recite the mission statement, know it by heart. If it's not at that level of understanding of every single board member to be able to recite the mission statement, then work on it. If you're serving on a board and you're not able to articulate why the organization exists, again, this is one of the things of this probably isn't going to be the most effective board in the world. But if every board member can recite the mission statement and translate that mission statement into their own personal sort of, this is why I care about this organization, this is why I get so excited about them, it's going to make for a far more effective board as a whole. One rhythm I've seen implemented well in that regard is at the start of every board meeting, just have one person share the mission statement. And you just keep on doing that every board meeting. Just start it out, keeps the why at the forefront, and can be really helpful to make sure it's recalled. We already talked a little bit about representing community. I don't want to belabor this point too much, except to say that representation is not the same as a voice. And so as you think about how is your community having a voice in your decision-making, be careful not to say, oh, we have a community member on the board, we're set. But actually making sure your culture as a board is fully engaged in listening to, soliciting and engaging with community members around how you're designing who you are and how you operate. So if we think about this in number of board seats, I like to say that you shouldn't have a single board seat for a community member. You should have at least 2 board seats for community members, if not far more. But having not only the number but also the culture of how you operate set up to hear from community is really important. I'm going to kind of breeze through the rest of these because they're addressed in other sections, and your bylaws speak to these. But how are you structuring yourselves with committees? What committees do you have and officer positions do you have? How do you make decisions? Many organizations revert to something akin to Robert's Rule of Order, which is fine and dandy and nothing wrong with that. You can also decide to make decisions by 100% consensus or supermajority or something else, but have it written down about how you make decisions. It will just help, especially with new board members, to orient them to who you are and how to join. And then finally, have some sort of mechanism for self-reflection as a group. Being able to ask yourself, where are we as a board? What skills do we have? What skills do we need? How do we feel like we're performing as a board? Just come up with a few simple questions that you can ask yourself a few times a year and check in as a group on how you're doing and what you might need to do to improve or to take that next step in your board development. We talked about preparation and about 100% financial participation. I'll touch on this briefly, mainly with the note that I put this slide in here to talk about fundraising for 2 primary reasons. The first is that if we think back to those responsibilities, the first one was our duty of care. And that duty of care speaks to making sure the organization has adequate resources to do its job, right? That's one of the primary responsibilities of boards, and therefore fundraising is a primary functionality of boards and board members. It has to be. It cannot not be. Now, I say that, and fundraising can take many different forms, and there are many different aspects to fundraising. It's not always just sitting down across the table or across the Zoom and saying, give me money. That's a very, very narrow part of fundraising. But suffice to say that fundraising has to be a part of the fabric of how a board operates if the board is going to be effective. And the second reason I put it in here is that more times than I can count, especially here in Chaffee County, folks have said to me that they have trouble recruiting board members because board members have told them, I'll sit on the board, but do not ask me to fundraise. Do not ask me to ask for money. I will not do that. And that concerns me, primarily because of what I just mentioned, but also because of the last bullet on here. If your passion for the mission is not greater than your fear of asking for resources, then something's not matching up. And I think that I force myself to flip the script on my own brain and say, I'm not asking for money. I'm inviting folks to join me and participate in the work of this amazing organization. And when I think about it in those terms, my mind flips. I get more excited about having conversations with folks and about engaging in fundraising. So I just want to bring that up, and I encourage you as a board to talk about what does fundraising look like? How are we approaching it? What are all the different aspects in that fundraising workflow? And how can we all participate in some of those aspects? We're not going to spend much time on this slide. I will make this slideshow available to you all afterwards, by the way. But I want to just call out a couple of key pieces here. The nuts and bolts and important documentations of organizations. We already talked about bylaws. We'll talk later about strategic plan, vision, mission, values, and financials. I just want to make a really pragmatic note that in the state of Colorado, and Lori Benson has done a lot of research on this, so she can jump in if she wants to add anything. But there are two different filings that you need to have as a nonprofit in Colorado with the Colorado Secretary of State. Most folks only do the business filing, which is a super simple, 10-minute filing with Secretary of State to say that you are a nonprofit corporation. The second one is called the Charitable Solicitations Registration. And it's more in depth, and you have to have your 501c3, it's populated by the information from your 990, your IRS 990. But many organizations miss that, and legally you need to have that registration in order to be asking for money in the state of Colorado. So I just want to call that out as a real small pragmatic note to just check in with. The final bullet on here, KPIs, just stands for—
Excuse me, Joseph, could you say that name of that document one more time? The Charitable Solicitation, say that one more time, please.
Yeah, Charitable Solicitation Registration. And you can file that and find more information about it on the Colorado Secretary of State's website. Lori, did you want to jump in?
Well, I don't know if I do or not. If you guys look at the NOLO website, which is the nonprofit legal organization website, they now say that if you have a donate button on your website, you need to be registered in any state that has this requirement, and it's 41 states. I've had lots of conversations with Joseph around this, and we have decided to just register in Colorado, where we're based, and roll the dice. But it is something you may want to look into as a board and decide board-wise it's like $11,000 to $16,000 a year to register in all 41 states, and there's an annual report that has to be filed. So just to throw that little tidbit into into your board conversations.
So for a little bit of perspective, in Colorado, I think it's $50 a year to maintain your registration. And it takes probably about an hour once you have all your information, your financials together. So it's not burdensome for one state, but definitely take a look at it and move forward from there. The final bullet on here is KPIs, and I refer to these as key performance indicators. So this harkens back to a lot of for-profit terminology that I think is really important for us to start incorporating into our rhythms as nonprofits. We'll talk more about this towards the end, as long as we have time. So it's key performance indicators. I want to pause for a moment on some of these really mundane terms that we often take for granted in the nonprofit world. And I want to make sure that we have a base level understanding or common understanding of what these terms actually mean and how they can be useful from a board's perspective. So the three terms I want to focus on are vision statement or vision, mission statement or mission, and the values. These are three distinct ingredients, none of which tell a full story on their own about who you are as an organization, but all of which, when combined, give a really complete picture as to who you are, why you exist, what strategies you think are most important, and how you make decisions. So these three pieces are really crucial to any organization. And I would really encourage you to ask yourselves, one, do we have all three of these? And two, when was the last time we looked at them or updated them or kind of wrestled with them as a board? Because these are really important. So I'll just go through them briefly. I usually use this kind of roadmap analogy to put these in perspective, where a vision is the destination. It is where you are going. It is a bold statement about what the world will look like when you are successful. So I think the best vision statements that I've ever seen are one, maybe two sentences that speak about, that say a positive affirmative statement about how the world should look. So for the Community Foundation, our vision statement speaks to a resilient, and actually I'm going to botch it now that I'm on the spot, but it's a resilient and thriving Chaffee County in which every person participates in philanthropy, right? So that is a bold statement about how the world would look if the Community Foundation is successful. It's not really measurable. It's not really one that we can say we've arrived today, we weren't here yesterday. It is a bold statement. It's not meant to be measurable. But that's the vision statement. That's where we're going on our roadmap. The mission statement is often akin to the route you're taking to get there. So when we plug in Denver to our GPS, we can either take 285 or we can take I-70, right? Those are two different routes to get to the same destination. Just like there might be 20 different organizations all working towards economic justice for all, right? That's the vision statement, is economic justice, but each organization might have a different route, different strategies they're taking to get there. So the mission statement is often 2 to 3 sentences, and it clearly defines the top 1 to 3 strategies that you as an organization believe are going to get you to that destination. So the vision statement is the bold statement about how the world looks when you succeed. The mission statement is gives the reader or the listener an idea of how you're going to get to that destination. What are those top 2 or 3 strategies? Usually those top 2 or 3 strategies therefore define and align with your programs, which are sort of those on the ground things you actually do every day. And then finally, the values. These are the guardrails that keep us on that road, that make sure we don't stray from the route that we've chosen. The values, in my opinion, the best, most clear use of values is when you have between 5 and 7 value words that you've chosen as an organization, and you have defined each of those value words with 1 or 2 sentences about what it means to your organization. So for example, a value could be sustainability. That word means many things to many different people, but sustainability would then be followed by 1 or 2 sentences about what that means to your organization and why it's important. Sustainability means that we will always seek to steward the resources we have to the greatest intent, or whatever those couple sentences are. Those 5 to 7 value words and their definitions are then able to be used as almost like a decision matrix. When you're confronted with a decision about funding to pursue or programs to implement or people to hire or office location to choose or property to buy, whatever it is, those values are helping to define where you should go, right? You're saying, is this sustainable? Is it equitable, or whatever those values are? Does this analogy make sense? Does anyone want to jump in and give a different perspective, or ask any questions on vision, mission, values? I'll just throw out there that if you don't feel like you have all three of these, part of what we do as an organization is I'm happy to help facilitate a board meeting that we would actually work on drafting these in about 90 to 120 minutes. So I've got some activities that we can work through. So if that sounds like it would be interesting or useful to your organization, let me know. Everybody's favorite topic. Who's ready for some financials? Yeah. All right. So I'm going to spend a decent chunk of time on financials. Again, I want to remind us that financials are not just numbers. They tell stories. And we as board members, it's our job to understand the story that the financials are telling. If you cannot understand the story that financials are telling, then you need to ask more questions or get your financials presented in a way that you understand. We're not all accountants. We're never all going to be accountants, and that's totally fine. But you are a fiduciary. You are legally responsible for the proper use of resources. And so understanding the financials and the stories those tell is super important as a board member. So I want to just walk through a couple of the distinguishing factors and the biggest things to think about as we approach this topic. At a very high level, nonprofit accounting is far more complicated than for-profit accounting. This is one of the primary distinctions between nonprofits and for-profits, in my opinion. For-profits get to have much more simpler accounting because they pay taxes. And we can think about this in the reverse of saying, I go in and buy a shirt, I get the shirt, the organization or the business pays sales tax and income tax and all that kind of stuff. And then they get to do whatever they want with their money. Whatever profit they have, it's theirs. They can do whatever they want with it. Who cares? I have no need to understand what they do with their profits because they've paid taxes and I got a product. For a nonprofit, I give $20 to a nonprofit. No one knows what's happening with that. That nonprofit does not have to pay any taxes on that money. But in exchange, that nonprofit has to be able to tell you what they did with the money. So this is the big trade-off between for-profits and nonprofit accounting. For-profits pay taxes in lieu of simplification, or in lieu of reporting, I should say, not as a blanket statement. They obviously have to report. But nonprofits have to be much more diligent about how they report their finances in exchange for the fact they don't pay taxes. So it's sort of an accountability measure from a really high level. And we call this fund accounting. So in general, we think about nonprofits needing to have different buckets that they're tracking their money through. And we'll talk more about that here in a moment. But I refer to fund accounting as the way in which nonprofits need to track their finances. And it's much more complicated than for-profit businesses. So when we think about fund accounting, there's two primary buckets. There are funds with restrictions and there are funds without restrictions. These are, at the highest level, the only two buckets that truly matter when you think about stakeholders like the government and the IRS. They really care about, do you have revenue with restrictions or revenue without restrictions? So examples of restrictions would be, I give you $100 and I say you have to use this in order to buy t-shirts for kids, right? When you accept that money, you are legally bound to do that, and you have to be able to prove that you did that. I gave you money with a purpose restriction, so it's going to flow into the bucket on the right there. I could also say, I'm giving you this money and you have to use it in the next 12 months, and if you don't, you have to give it back. That's a timing restriction, right? You have to use it. I didn't say for what, but I said by when. So those are two primary types of restrictions. Usually, not always by any means, but usually grant funds come with restrictions. Most often grants are for programmatic things. The grant funder will say you need to use this for your gardening program and you have 12 months to use it. And you have to provide us reports back that demonstrate you did those things. Without restrictions are obviously money that you get that has no restrictions at all. So I give you $20 as an individual. I don't care what you do with it. Use it the way you think best. That's no restrictions on that money. Oftentimes, if you're selling something or you're providing a service as a nonprofit, which you definitely can do, that earned revenue usually is without restrictions. It's treated much like profit of businesses. You can use it however you want to pay for whatever you want. As we think about the flow of money, we have those kind of 4 fountains of money, right? 2 of them have restrictions, 2 of them don't have restrictions. To me, it's helpful to think about a release valve between the with restrictions and the without restrictions, right? Let's say I give you $100 to buy those t-shirts for the kids. You go and you buy those t-shirts. You just met that restriction. Now you can release that $100 from the with restrictions bucket, dump it into the without restrictions bucket, and pay that receipt to the t-shirt manufacturer, right? Or let's say you met the timing restrictions. You spent all the money or you did the thing by the date. You're releasing that, you're taking that restriction off of those funds conceptually and moving it through your system. So for me, this is a really important question for board members to be asking when you know you have restricted funds is, have we met that restriction? I see we're spending a lot of money. Are we meeting the restrictions that's on those dollars? Does this concept make sense to folks? Does it resonate? Okay. So the how we understand that, the documents we use to understand the stories of our organizations are the financial statements. And there are many different financial statements. I don't pretend to know them all, and definitely won't talk about them all. But I want to talk about the 3 primary ones. And of those, really focus in on 2. So you can see that we're talking about the income statement, the balance sheet, and the statement of cash flows. Those are the 3 primary statements for any organization, including for-profits. Generally, the statement of cash flows is not widely utilized. This is a statement that tells a story between 2 dates about how much money went to what different accounts and what uses, right? Think about debt. How much money did you use to pay down debt? That would be demonstrated on a cash flow statement. Generally, banks and lenders are the only ones that ask for cash flow statements. Foundations, funders, donors almost never ask for cash flow statements. It's just not needed. So I'm not going to focus too much on that one. The income statement, otherwise known as a profit and loss or a statement of activities, and the balance sheet, or also known as a statement of financial position, are the 2 most important financial statements that you as a board member need to become comfortable reading for your organization so that you can pull out the stories they tell. And the analogies I often use for this is that a P&L, or the income statement, is a story about what happened between 2 dates, right? So a profit and loss always has a start date and an end date, and it captures all the sum of activities that go on between those 2 times. So the questions like, how much money did we make last year? That would be answered in the P&L. How much revenue did we get for XYZ program? That would be answered in the P&L. How much did we spend on our internet? That would be answered in the P&L. So it's got revenue totals for that time period and expense totals. Where did that money go for that time period? It tells that kind of collective story. However, and then at the bottom, obviously, it shows net income, hopefully, or loss, potentially. So one example of why you need both this and a balance sheet is that, let's say you made $100,000 last year and you only spent $50,000. And the statement of activities looks really good. It shows a net profit of $50,000. And you're like, yeah, we're doing well. But what you don't know, or what that statement's not telling you, is that you actually have $70,000 of payables, right? You have $70,000 of debt or credit card debt, or you owe a vendor a bunch of money. That's not even shown at all on the profit and loss statement. So you have to have the other side of the story, which is shown in the balance sheet. So the balance sheet, I like to say it's a camera, it's a snapshot in time. It takes place, it captures your health or your position on a single day. And that day, if you're looking at both the statement of activities and the balance sheet, the ending date of your statement of activities should be the same date as your balance sheet, so that you see where you ended that time period. But a balance sheet is just that one day. It's where you are today, this moment. How much cash do you have in the bank? How much are you owed? How much do you owe? All those questions are answered in the balance sheet. So you might see that, yes, you had 50,000 of net revenue, but you actually owe 50,000 in payables. So you have no money, right? That's the story that you might pull out from both those statements when you look at them together. Other high-level questions about these statements or the stories they might tell? All right. It's a full slide, but I won't focus too much on this. I just want to make sure that as board members, we understand there's two ways of presenting these financial statements. There's a cash basis and an accrual basis. And it's important that unless you're talking about a budget, that you're always looking at accrual basis accounting. And the easy way to think about this is that cash basis is like it sounds, it follows the dollar bill. It does not honor any paper other than money. And so if you got an invoice and you owe somebody 10 grand, but you're using cash basis statement, you're not going to see that 10 grand until you actually pay it out of your bank account. The money is actually left, then you're going to see that as an expense. So cash basis is often the best way to budget, because you need to make sure you have cash in the bank to pay expenses. So you're going to budget from a cash basis standpoint of saying, when are we actually going to receive that check? And when are we actually going to pay it out? But usually for any other financial statement, whether it be a P&L or a balance sheet, you want to be looking at an accrual basis report. And it honors the paper trail. So you get a $100,000 grant letter from a funder. The date of that letter is actually the date that you enter that transaction, and it shows up as revenue on your P&L and as a receivable on your balance sheet, right? That's accrual basis accounting, so that you as a board member know we are owed money and we got 100 grand in revenue. That's amazing. If you're using cash basis, you wouldn't actually know about that receivable until it actually got deposited into your bank account. So it's not helpful for planning or for understanding your true financial health. Are there any questions about cash versus accrual? I know I just kind of skipped over some of that. All right. Kind of rounding out some of the best practices here, talking about budgeting. We all have a tendency to delay budgeting and procrastinate. I know I do. But as organizations, budgeting is often, it starts up at this last kind of bullet point here. But what I want to encourage you as board members to do is to try to take the long view to budgeting. That the actual budget, whatever numbers you say you are going to spend or raise throughout this next year, should be the last piece or the tip of the iceberg. And the rest of the bulk of the work that you need to do are in these first couple of sections around strategic planning. Where do we want to go in 3 to 5 years? And what do we need in general to get there? Next year's plan, thinking about what are we going to do that's going to move us towards that 5-year goal? What capacity do we need to raise the money we need? What capacity do we need to administer the organization? What kind of staffing does that look like? And then the last piece of this is putting numbers to those resources you need. So I just want to encourage that frame of mind when you as a board member are thinking about budgets. Always be asking for what are the plans and the goals behind these numbers, right? We're not just looking at the numbers themselves, but what do they say about where we're going? And are we comfortable with that as a board? I'll end here. on board reporting, this is a kind of an ongoing important topic for you all to wrestle with. Essentially, I use this to talk about any information the board receives about the organization. Every time you meet, you're going to be receiving a bunch of different information. It could be financials or programmatic updates or needs from your community, surveys, all that kind of stuff. There needs to be some consistent presentation of consistent metrics so that you as a board member can say, oh, this month, this number just doesn't look quite right because it shows that last month it's a way different number. Or all of a sudden I see that this year our program numbers, the number of folks we've served, is way down, right, compared to this time last year. What's going on? Those are the kind of questions that board members need to be able to ask and need to be able to glean out of the reports they're given, or that you generate if you're a working board. So I would encourage you to establish and just start trying a regular dashboard of information. This probably will include some numbers like how many donors did you have last month? How does that compare to the same month last year? How many donations did you get? How much did you spend? And how does that compare to last year? But then some others might be more qualitative. What are the top 2 quotes or testimonials from those you serve, or a link to an article that talks about needs in your community. But this dashboard, the more you can get the components or the areas of that dashboard to stay consistent month after month, the more you're going to be able to start getting your pulse on the trajectory of the organization.
So can I interrupt here?
Yeah.
You're saying a dashboard is basically the format the information is presented in? I'm not real sure people use this word dashboard, what you mean by dashboard.
Yeah. No, thanks for asking about that. Yes, you're right. To me, a dashboard is how information is presented. So it's one thing, for example, to pull your financial statements out of QuickBooks and send them to your board. It's good. Every board member should have access to full detailed financials. However, if board members aren't CPAs, it might not mean a whole lot to them. And so therefore, pulling out a couple of key pieces of information from those financials and presenting them in a dashboard, for instance, what's our net income for the month? How much money did we come out of the month with? That's a really simple number that could be presented on a single page that you could start comparing month after month and say, oh, we're generally trending up or we're generally trending down, or we've had 4 months now of negative net income. What's going on? So yes, Fran, it is how information is presented. It's not the only way in which information is presented, because board members should want to and should have access to the full detail of everything, but it's that pulse check. And without a pulse check, it's hard for board members to identify the questions they should be asking or to take a deeper dive into the proper areas of concern or of excitement. Does that make sense?
Yeah, Joseph, I've got a question too on the dashboard issue. This could apply to things other than financials.
Absolutely.
Am I right? Just how are our programming numbers comparing to last year or the year before? I could see use in a number of ways.
Absolutely. And that's what I want to encourage you to do, is ask yourselves, what information do you care about knowing on this dashboard? To me, the primary areas are finances, fundraising, and programs and impact, right? There's other areas like marketing. How many views have we had on our website? That could be an interesting metric to keep track of. But those 3 primary areas, choose some metrics in those and just start reporting to the board on those, or asking for those reports from those that prepare them. Because the more you can create those consistent touch points of data, the more you can keep your pulse on what's important. So number of attendees to your talks at the Humanist Talks, right? If attendance is trending upwards every month or every quarter, that's a great thing to keep your pulse on. If it's trending downwards over the course of a full year, time to ask what needs to change. How do we get that back up? How do we meet more people? Yeah. What questions do you all have or thoughts do you want to have? Are there any kind of general discussion points you'd like to have in the last few minutes we have together?
Actually, I'm giggling to myself because this whole dashboard thing has come up with a lot of questions. But is there a template that you have found, Joseph, that works really well for kind of, can you hear me? I don't know if you guys can hear me, but is there a template that you found for kind of cutting across people's different backgrounds to present information in a monthly way that can be easy for someone to just plug in?
Danielle, I wish I had a template. So I will say this. I am happy to send on a few of the different templates that I've used in the past. However, they will change, and they should change, right? And that's one of the constant questions I have for my board. Literally, I sound like a broken record every single board meeting. I present the dashboard, which has 10 different financial metrics on it, from donors to donations to revenue expenses. And every single month I'm asking, what information do you care about that you don't see here? Or how could I present this information differently to help make sure you have a pulse on what's going on? So every month I'm tweaking and changing that dashboard to try to better align with the information the board cares about. So I know that wasn't really a helpful answer. But yeah, I would encourage, it could be literally just a simple Word document where you're plugging in a couple of key numbers and statements or program impacts, and then keep on iterating as you go forward. So I'm happy to share some templates, but just know that they'll be changing. Well, I appreciate you all being with me and participating in this. I hope it was a helpful kind of 101 overview of boards and board service. If you have any questions, please feel free to reach out to me. I will put my information right in the chat. And I'll also send out the slide deck to you all, along with a couple of different templates that could or might not be helpful either way. And am I going to be offering a Board 102? We will be working on developing a next kind of level of this that will probably, I'll probably actually ask you all a question in the email I send you as a follow-up. So I'd love to hear what general areas of this presentation would you like to listen or learn more on next? Because I think financials is a big topic that could be its own session next. We could also look at more of the kind of fundraising or governance aspects, policy aspects. So I'll ask you that question in the email. I appreciate your responses to help formulate what a next level would look like. And then Jane just asked if you have a moment and you want to type in your websites of your various organizations into the chat. She would love to know who you are and who you're representing. So with that, I'll be done. I'm going to stop recording. And